Welcome, ladies and gentlemen, to a new edition of our virtual online roadshows. And today we have here the fantastic, really successful gold producer and, of course, also copper producer, Oceana Gold. And with us here is Sam Pazuki, the Senior Vice President, Strategy, M&A, and Investor Relations. Good morning to Canada. Sam, how are you doing?
Morning. Good morning. Good to be here.
Yeah, thanks for taking the time and great to have you here. You brought to us also a great presentation. Before we start with that, I see our investors here checking in already. Let me do some legal remarks, which are important. Of course, you know me all. My name is Jochen Steiger. I'm the CEO and founder of Swiss Resource Capital and also the founder and chief editor of Commodity TV and Rohstoff-TV. Also from my side, a very warm welcome. And yeah, we are fully complying to all legal DSGO, how can I say that, ruling here, and the data security law in Europe, but also Great Britain and Switzerland. So nobody can see each other. Nobody can see any names nor emails. For the chat function, please use the chat function to ask your questions because we want to have a lively discussion as always after Sam's wonderful presentation and a nice Q&A, which I will then moderate. So thanks for taking the time and let me put up the slides here. So let's get started. Sam, the floor is yours.
All right, super. Thank you, Jochen. No, it's a pleasure to be here. I hope everyone's doing well. I know we're still going through some pandemic craziness, but hopefully everyone is healthy and safe. So yeah, I'm going to just walk through some key slides that we've got in this presentation deck. We just reported our Q3 earnings last week, which you would have seen a big beat across the board. But before I proceed, just turn everyone's attention to the cautionary statements. I will be making forward-looking statements. There are some risks associated with that, so just have that reviewed at your leisure. So in terms of Oceana Gold overview, there's the map. It's really nice to see that Didipio is listed as an operation again, not just an asset that was sitting idled while we were going through the finalization of the contract. So pleasant to see Didipio back up and running, and I'll get into Didipio in just a moment. But basically last week we reiterated our guidance, 350 to 370,000 ounces, all-in sustaining cost of $1,200 to $1,250. And that includes some changes between the assets. So Haile, we've increased our guidance. The original guidance we had in the start of the year was 150 to 170. I think it was about a month ago or so, we increased it. Well, we increased the floor on that production guidance range to 160. So the range was 160 to 170. And happy to say last week, we increased the guidance again to 175, 180. So Haile is progressing quite nicely this year. Didipio, we had an initial guidance, which we put out a month ago at 5,000 to 10,000 ounces for the remainder of this year as the operations ramp up. We just increased that last week, 7,000 to 12,000 ounces of gold plus 1,000 tons of copper. In New Zealand, unfortunately, we did downgrade guidance a month ago at Macraes, just related with some of the operational challenges we've had this year. And then we narrowed the range last week. So Macraes should produce 138,000 to 143,000 ounces of gold. Waihi was impacted by COVID restrictions from August, and so we downgraded the guidance there to 30,000 to 35,000 ounces a year for this year as we continue to ramp up Martha Underground. So top corporate priorities. I mean, this is a key slide. This is what we're focused on right now. First and foremost, we want to deliver long-term value to shareholders. That's what we are here to do, is to make decisions that are based on long-term considerations to drive value over the long term. We can very easily get caught up in the short-term mindset of the market, and it's just become shorter and shorter when you look at how the market is managing the different investments, looking at different companies, measuring them on quarter-on-quarter performance. Mining is not a quarter-on-quarter business. Mining is a long-term business, and we have to make sure that we don't get caught up in that short-term mindset of the market. We are making decisions based on the long term, recognizing that we have had challenges in the last couple of years. I think I've said that often on this in this format, but we are in a much better place. First and foremost, we've got Didipio back into the portfolio. This is a major operation for us. It's been down for 2 years, and now we've got to start restarting and ramping back up to produce gold and copper. And it's a great time to be a copper producer, just given where the commodity price is. So our number one priority is to continue to successfully restart and ramp up the Didipio operations, and I'm happy to say that that's going well. We have to continue to focus on delivering long-term value and returns at Haile, not so much being focused on how many ounces of gold we produce there, but to make sure that the asset is generating free cash flow. Every asset has to generate free cash flow, and every asset has to be measured on the returns it can deliver to shareholders over the long term. More specifically, at Haile, we did announce that we are going through a technical review, and we are making some good strides there, and we hope to have a new mine plan that we can talk about within the first half of next year. But I'll get into a little bit of detail there. Obviously, WKP, we've talked about that before. WKP is a game-changing discovery. It is a fantastic deposit, which we continue to drill. We continue to advance forward towards lodging the permit, the actual official permit application, again, first half of next year. We are working on a pre-feasibility study, which we've expanded the scope on. So with the timing of that is likely pushed from first half of next year to a later date as we expand the opportunity there at WKP. And then the fourth and fifth points are things that we're going to do regardless of where we are as a business. We're always going to look to reduce our cost. We're always going to look at how we can more effectively allocate capital. So 2 areas that have bitten us in the last couple of years, 2 areas that we're very focused on, again, to drive long-term value and to ensure that the business is operating as efficiently as it can, and ensuring that capital is being allocated in a prudent manner to drive shareholder returns. So from Q3 2021 highlights, which we announced last week, improved profitability. It was our 4th quarter of profitability for the business, generating $53 million of adjusted net earnings, which was 7 cents fully diluted per share. And that beat estimates, which were at 2 cents a share. So it was a big beat on the quarter. And that was really driven by sales at Didipio. We were successful in transporting the entire inventory that we had on hand 2 weeks ahead of schedule. Plus, Haile delivered a very strong 3rd quarter. We were expecting some lower grades, but the higher grades were maintained at Haile. So it delivered a stronger than expected quarter in Q3. Those are some of the more specific numbers around the quarterly results. So again, year-on-year production increase driven by Haile. Quarter-on-quarter was expected to be a decrease, but it was in line with expectations. But there was a difference in terms of where the contributions were being made from, with Haile being stronger than expected, New Zealand being weaker than expected, related to the 2-week nationwide lockdowns that took place in August into September. But very strong financial results, again, driven by Haile's performance, but also the sale of the inventory at Didipio. So that delivered the strong financial performance. And we're well placed for the rest of this year, basically, to deliver on our guidance. Again, capital allocation, the way we look at it is that we have to manage or run a balanced business, one in which the free cash flow from the business needs to go towards returns to shareholders, to meet our debt obligations, and to invest in high margin growth. Not just any type of growth, but high margin growth. And we need to assess how best we can allocate capital on the basis of those 3 different buckets that I did mention. But we are in a very good spot from a balance sheet perspective. We've got $143 million of total liquidity, of which $113 million is cash. We do have a fully drawn revolving credit facility that's $250 million, along with equipment leases. That debt is not due until the end of 2024, and it has very competitive fees as well too, or interest rates, I should say. So this is, again, one of our priorities is enhancing our capital allocation framework. But when you think about Oceana going forward, it's 3 main buckets that we're looking to deploy capital towards. So without further ado, let's talk about Didipio. I mean, this is a world-class operation. It's led by Filipinos and has been a major source of free cash flow generation for the company. It's been shut down for 2 years. We're happy to say that the restart is going well. It's going to plan, even despite the continued risks associated with COVID-19. The logistics side of things are ongoing and will continue to be ongoing as we ramp up operations. As I mentioned, the concentrate, we had 18,000 ounces of gold plus 3,400 tons of copper that were in inventory when we were able to restart. The full transport has been successfully completed, and again, that's 2 weeks ahead of schedule. So the total metal value of what we transported basically is around $63 million, which is a pretty sizable amount of money or cash to Oceana. We've invoiced for all of it. We've got $38 million that have been received as at the end of the second quarter. So we expect that the rest of the cash will come through in this fourth quarter. But happy to say that process is complete without issue. Processing, the restart activities are going well. We are at 75% complete as of last week in terms of all the recommissioning activities that we were doing. That included mill upgrades. It included recommissioning the crusher. We're crushing ore now, and that was one of the images that we had last week in the presentation. So milling is expected to start in the middle of November. I think there's an opportunity to do better than that, but that's what we mentioned last week. So that would be a fantastic milestone for Oceana Gold, because that basically means it's the start of producing new gold and new copper at Didipio, and it would be the first production in 2 years. So that's progressing well. We also mentioned last week that underground mining activities have recommenced 1 month ahead of schedule with ore development. So we have begun to deliver underground ore to the ROM pad. So when we do start processing, we will start with mostly low-grade stockpiles. We've got 23 million tons of stockpiles on surface. But as the underground operations ramp up, we will progressively increase the amount of higher-grade ore through the plant, basically supplementing the mill feed. So that is your progressive ramp-up schedule to full production, which we've outlined would be achieved around 8 to 9 months from now, so basically middle of next year. And once we get to full underground mining rates, which is 1.6 million tons per annum, we will be at full production rates. And full production rates for Didipio is 10,000 ounces of gold a month, plus 1,000 tons of copper a month at first quartile all-in sustaining cost. So this production you see as guidance, which I've already mentioned, is 7,000 to 12,000 ounces of gold plus 1,000 tons of copper. That reflects basically the start of milling middle of November towards the end of the year. But that number will progressively increase as ramp-up activities progress. So this is a fantastic outcome. Again, Didipio is a world-class operation, and it's great to have it back into operation, and we can talk about it as an operation. And when you look at the historical production and historical performance of Didipio, the drop you see in 2019 is just related to us being shut down in August of that year and not having any production to reflect it. That production, obviously, the sales of the inventory were just completed, as I've mentioned a few times so far. But you can see that in the course of 2016, 17, and 18, Didipio produces over 100,000 ounces of gold plus what looks like around 16,000 tons of copper. Now, again, going forward, Didipio should produce on an annualized basis 120,000 ounces of gold and 12,000 to 13,000 tons of copper. So that's the nominal annual output out of Didipio, but you can see how much free cash flow it's generated over the last several years. And that's what's reflected on the slide on the right, where you can see the all-in sustaining cost margin in blue. So again, fantastic operation, poised to deliver free cash flow to shareholders, and a great outcome for many stakeholders, including Oceana shareholders, including Philippines, which is struggling through COVID, and the Didipio operation will be a good contributor of socioeconomic benefits to the country, especially as they are looking to restart their economy. Shifting gears to Haile. The Haile operation, as I mentioned, had a very strong third quarter. It's had a strong year thus far, which is why we've increased guidance twice now. So it is expected to have a weaker fourth quarter, just as the grades come down. This is just really related to mine sequencing. And again, the third quarter, we saw some positive reconciliation out of one of the pits that we were mining. We do think that positive reconciliation is just a near-term phenomenon, and that we will revert back to what's in the resource model going forward. But nevertheless, a great year thus far for Haile. We are still in the throes of completing the technical review, and one of the issues we are facing is a continued delay in the SEIS process, which could impact our output for next year. I'll get into that in just a second. But in terms of the Haile technical review, I know a lot of investors are focused on what that is and what that means. Basically, Haile it's an asset that hasn't delivered to our expectations, hasn't delivered to external expectations. So we want to make sure that Haile is delivering long-term value for shareholders by maximizing cash flows coming from the asset. So it's no longer the days of producing as much gold as we can. It's about generating as much free cash flow as we can, ensuring that the ounces that we are mining and we're processing are high margin ounces and not value destroying ounces. It's being more prudent with how we deploy capital to the operation. It's to get a firm handle on our cost base, and it's to ensure that we've got the right people in the right roles, and we're attracting employees, and we're also retaining employees. So this process basically started a couple quarters ago. There are some low-hanging fruit, and we have been picking that low-hanging fruit. We've got a new general manager there, David Londano, who came to us from Kirkland Lake. He ran the Detour Gold Mine prior to that. And David is a fantastic operator. He's already implemented a number of changes, which is part of the reason why Haile is having such a good year. He'll continue to pick the low-hanging fruit, but there's some more changes that are required that I call them structural in nature, which means it'll take a little bit more time to implement and will take more time to realize the value from those changes. But overall, we think that over the course of the next 18 months, we will be able to implement those changes and start to realize the value from making those changes. But basically, this Haile technical review will culminate into a new mine plan. That new mine plan should be completed within the first half of next year. And what it will demonstrate is an operation that's going to be generating expectation is that it'll be generating free cash flow and maximizing free cash flow generation going forward. On the SEIS update, so basically SEIS is the Supplementary Environmental Impact Statement. This includes three main components. One is to go underground with the Haile underground. So we're in the process of building the surface infrastructure, but we need the permit to be able to go underground. The other component is an expanded footprint, which allows us to build additional waste storage. So part of open pit mining is you need to have designated storage areas for waste, and we need the expanded footprint to be able to store that waste in those areas. So any further delay to getting this permit means we have to slow down mining to be able to accommodate the amount of waste that we have currently, but will be having as we continue to mine. The other area is around water treatment or the expanded water discharge rates. So we need the permit to be allowed to expand how much water we can treat and then discharge locally into the riverways. So that again is something we have to manage right now, the water levels and waste levels. And the permit, if there's further delay, it means that we can't go again as fast as we would want on the mining front. We'd have to slow things down while we wait for that permit. And if you look at our cost base in the last few quarters, a big proponent of our mining unit costs, for example, or even processing unit costs, relate to how much waste we're moving around because of the delay in the permit. So there are some pits that we've mined out, which we're using right now, either for water storage or waste storage. So we do have to rehandle some of that waste and water, and that's contributed to some of the higher costs. So once we do get the permit, then that should actually reduce some of our mining costs and processing costs because we won't have to have such a high rehandle cost. But again, we are working with the regulator. We are working with them on a weekly basis to advance this to a final decision and get the associated permits, which we're now expecting in the first quarter of next year. And then New Zealand operations, the Martha Underground continues to ramp up, even despite the COVID 2-week lockdown from the government. It did impact us, which is one of the reasons why we reduced our outlook for this year. We do expect next year to be a much better year for us operationally at Waihi. Right now, we're expecting basically to double the production rate for next year at a much lower AISC, so higher margin ounces as we continue to ramp up Martha Underground. But basically, Martha Underground should be looked at as a 90 to 100,000 ounce a year producer with an AISC of about $1,100 an ounce. So that basically is going to continue to advance while we continue to work on WKP, which is 10 kilometers away. We have had to drill, or we've been drilling, but we won't be able to drill the 10,000 meters we thought we would drill this year related to the COVID lockdown, but also a seasonal drought period. Nevertheless, the drilling we have done has been very successful this year. With our announcement last week, we stated that the East Graben vein, which is the vein to the right of that picture, that schematic, that's where most of the resource is right now. Well, 99% of the resource is from the East Graben vein. From the announcement last week, we stated that we've just extended mineralization to the southwest. So it's now got a 1.2 kilometer strike length. So the WKP is a fantastic deposit, and we're not going to rush through this. It's got 1.1 million ounces at 13 grams, which is pretty significant. And what's very significant about it is that that resource is only based on 35,000 meters of drilling. So based on just 35,000 meters of drilling, we've got 1.1 million ounces of gold at 13 grams. This year, we'll probably complete about 5,000 meters of drilling. You should see an increase to the resource, but we'll provide an update when it's appropriate on that. So this is something to continue to watch. Again, as I mentioned, the consenting process, or the permitting process, we expect to lodge the permit application in the first half of next year, and then we'll continue to drill this vein system and advance the study work that we're doing. And then the Macraes operation, we've narrowed the guidance. It's had a challenging year thus far, but we're certainly expecting a much stronger fourth quarter to deliver on that guidance. The new underground at Golden Point, we achieved first ore, which we announced last week. So we've got 2 underground mines there now currently mining to complement the open pit operations. So Macraes is basically an operation that should produce between 140 and 150,000 ounces a year going forward. Should be the steady operation within the portfolio and should generate some decent free cash flow going forward. That's just a slide here on Golden Point. Again, the key milestone has been achieved, so we'll continue to ramp that up. And Golden Point will eventually replace the Frasers Underground. And sustainability, we continue to be one of the best gold mining companies when it comes to ESG. We'll continue to focus on coming up with our targets related to becoming carbon neutral by 2050. We're working on setting some interim targets to achieve for 2030. I know that's very topical given the conference that's taken place this week. So we as a company will continue to look at what makes the most sense from us to contribute to that zero carbon mandate and continue to advance not just carbon neutrality, but also our other ESG programs forward, including biodiversity, water management, TSF management, and human rights. So again, as I said, this is a very important slide, which I talked about right at the beginning of this presentation. We know what to do. We're focused on doing it. It basically is to deliver on our commitments, near term, medium term, and long term. We want to get back to being that company that delivered very strong returns to shareholders. At one point in time, we were the best gold mining company when it came to return on invested capital. We had one of the highest EBITDA margins in the industry, and we were focused on delivering value to shareholders. And that's our mandate. We want to make sure that we're one of the best gold mining companies on the planet, not just on the basis of how much gold we produce, but how much free cash flow we're generating. and we're very focused with the new team, with the new board, to deliver on these corporate priorities that we have. So that's the formal part of the presentation. I'll just turn it over to you, Jochen, for the Q&A.
Yeah, fantastic, Sam. Thank you very much. I put this off here, so let me go into the chat function. Yeah, have something to drink here. You spoke a long time now. First of all, thank you very much. Especially your last slide is one of the reasons why I'm a shareholder of your company too, and I really see that also you have tremendous potential for the future. That is also for sure. Please, to our investors here, type in your questions into the chat function. That would be fantastic. And we have already the first one here from an investor in Munich. What would or could be the scope of WKP in terms of ounces?
Yeah, thanks for that question. So WKP, again, it's a game-changing discovery. Again, based on only minimal drilling, I think our discovery cost is $7 an ounce, which probably has got to be one of the lowest discovery costs in the world. So it's early days still because of the minimal drilling that we have done. We do need to, it's helicopter assisted drilling. So we have to make sure that we get each site permitted, and we can't drill when there's seasonal droughts in this area, which is part of the reason why it's limited. Drilling here is going to be a decade. We're going to keep drilling and drilling for a very long time as we build up the resource. But obviously, we've got a good resource there now, which we can start thinking in terms of operations and extraction. But over the course of the next several years, we'll continue to drill this out. So we don't actually know how big this can be. The geologists tell me, well, first off, the geo that's been in this region for 40 years has called this the best discovery he's ever had in 40 years. And if you think back last 40 years, I mean, Waihi's mined 9 million ounces of gold. And there's been a bunch of new discoveries through the Waihi operation. So for him to, after 40 years, to say this is the best discovery says a lot. It means a lot. It has the same geological signatures to Waihi, which gives us potentially some goalposts to think about. But at this stage, we don't know how big this could be, but it could be something big. We're just not sure how big.
Okay. So I can continue also with a question from my side about WKP. Game changer, that is really for sure. We just saw the grades, which are really outstanding. Now is the question, of course, how big this is. You just said that already. So you have ongoing drilling there, and I'm pretty sure that we will see quite soon again drill results. So what you have seen so far, is the geological setup, the setup of the mineralization, really continuing in the drill core you are putting out of every drill you are doing?
Yeah, I'd say the drilling we've done has been quite successful. We basically have hit mineralization every time we've drilled for East Graben vein, for the East Graben vein. Right now, we've got 2 drill rigs there drilling. One's focused on geotechnical drilling to support the study work that we're doing. The other drill is on resource conversion. So we have 400,000 ounces of indicated. We've got 700,000 ounces in inferred. So the second drill rig is looking to convert those inferred ounces to indicated, and that's to support the pre-feasibility study that we're working on. We would potentially look at permitting a 3rd drill rig that would be focused on extensional drilling, which I think is really the exciting stuff. Not to suggest that the resource conversion drilling hasn't been exciting for us. In fact, earlier this year when we provided a WKP update, we announced the best drill hole we've had at WKP. So we're looking to complement that drilling. So basically, there's 3 main vein structures. We've got the East Graben vein, which I'd mentioned 99% of the resource is there, and that's where most of the drilling's been focused on. We have T-stream that's to the west of it, and then we have the Western vein to the west of that. And we have, I think there's only been 3 drill holes into the Western vein, so there's very early days there. T-stream is the vein Newmont had started drilling. Definitely a lot of smoke there. We've put in our own holes and have confirmed some very good widths and grade. But East Graben is where we focused on. As I mentioned, we've increased the strike length of that by 20% with drilling we've done this year. It is still open in multiple directions. It's open at depth as well too. So again, we've only just scratched the surface here. We'll have to continue to drill not just the East Graben vein system, but the other two veins that I'd mentioned. And that's what really excites us, is that there's not just one, but there's three, and two of them we haven't even really drilled out as to the extent that we've drilled East Graben. And again, we haven't even drilled out East Graben to the extent that we would like at this stage.
Definitely. Okay, so we can say that will be the next mine, if you want to call it like this. Where do you see a first possible, I know it's a forward-looking statement for the regulators, but where, to your personal estimation, where do you see, let's say, a possible mine life, production rates you already touched a bit on, but and also, let's say, cost-wise, this must be, let's say, yeah, much lower AISC than we saw before, right?
No, absolutely. With those grades, I mean, grade is king. Anywhere on the planet, you want to get the projects with the best grade. So right now, the critical path for us at WKP is permitting. So once we lodge the formal application, we'll basically start the formal part of the process, permitting process. Things are getting tougher around the world to permit, and we certainly aren't taking any shortcuts to ensure that a project is permitted. We have had a very strong track record in New Zealand. Been operating there for 30 years. We've successfully permitted multiple projects during the course of the last 30 years. So we are confident in that process, but we're at the mercy of the regulator in terms of timing of permits. But basically, while we were waiting for the permit process, we'll continue to drill. We continue to look at completing study work at the operation. But WKP, based on the PEA that we put out last year, should produce between 150 to 250,000 ounces a year alone, just from WKP. If you add the 90 to 100,000 ounces from Martha Underground, I mean, Waihi's a 250, 300,000 ounce a year producer. WKP, its AISC would be sub 500 per ounce, so it'd be a significant cash flow generator for the company. And frankly, WKP would make Waihi our best operation that we have in the portfolio. WKP, the ore there will be trucked to an existing process plant at Waihi and processed there. So we don't need to build a new process plant. What we need to build is an underground mine. The bulk of the capital will be on building declines. Because the deposit sits under Department of Conservation land, we need to put a portal outside of Department of Conservation land to access the deposit from outside of dockland. So we'd be looking at a 7-kilometer decline to access the ore body. But again, that's given the grades that we have, I mean, it's still a very lucrative project or prospect.
Definitely. And can you pay the capex? As you said, you can use already existing infrastructure, which is always nice to have. That is for sure. But to build an underground mine with declines and stuff, can you pay, let's say, out of cash flow?
We'd have to again to complete the study work to confirm what
but just
capital costs
as an idea.
But yeah, I mean, every operation we want to make sure that it can fund its own projects. So from Waihi with Martha Underground, we'll be generating some good free cash flow from the operation that can then be deployed to WKP. Part of it will also be the timing in which we can develop. So I mean, if we can rapid develop, then we may have to. In terms of the broader company, utilize free cash flow to fund that. If we aren't rapid developing, then it'd be self-funded through the operation.
Okay, super. So let me close that here. Good. Then there is a question from a Zurich investor. How mining friendly is South Carolina? How long is the permitting process there? Hopefully shorter than in California. So and we know that you are waiting on the SEIS, right?
That's right.
Yeah.
So I'd say South Carolina in general is a business-friendly state, probably one of the most friendly for businesses, which is why you've seen a lot of major companies set up businesses in the state. So BMW, Volvo each have new plants that are there. Boeing's just set up an assembly, manufacturing assembly in South Carolina. So you're seeing a lot of businesses set up because of the business-friendly nature of the government. And it's been like this for about a decade. So South Carolina is certainly one of the fastest growing states in the country. We also have a very good relationship with the regulators. We've got a good track record as well too, and we work very closely with the regulator to make sure that we're meeting our obligations, permanent obligations. And I'd say from that perspective, the state regulators, again, they have to do their proper due diligence to issue permits, but I'd say they're business friendly as well. Then the permit for the SEIS is dependent on the U.S. Army Corps of Engineers because we operate in wetlands. It's under their permit mandate, and they're going through their proper due diligence as well, make sure that all the information that we've provided aligns well with science and with the environment and the regulations. We work closely with them. We had a hearing or a draft notice of resolution earlier this year, and we had a hearing and had a number of stakeholder inquiries, which we've addressed each one. We've got a good relationship with other stakeholders, not just the permitting agencies, to address their concerns. So I feel like we've achieved basically all the outstanding issues. Waiting for the U.S. Corps to complete their review process and issue a final decision, and then the SCIS associated permits. So that I'd say, generally speaking, the country is business friendly, and South Carolina specifically is business friendly. But there is a process that has to be followed. There is no prescribed amount of time that it takes to get projects permitted, especially at the federal level. So we'll continue to work with the regulator to deliver those permits.
Fantastic. Then there is a question from our good friend in Zurich, you know whom I mean. How easy is it or difficult for you to attract talent and specialists to South Carolina, or in South Carolina even?
Yeah, I should let Patrick answer this one himself.
You're not allowed to say names.
Sorry about that. Yeah, so it's getting tougher, I guess, around the world in terms of labor shortage, just related with COVID-19. I mean, we're the only gold mine that's east of the Mississippi, the eastern part of the U.S., with most of the operations out in the Great Basin area, in Nevada, and in Utah, Colorado, etc. We have to make sure that we are competitive. We're a competitive employer, that we are attracting the right talent. We have a lot of good talent there right now at Haile. A lot of it's come from Nevada, or it's come from the coal mines in the eastern part of the U.S. But we want to make sure that we've got a culture there that is focused on safety, it's focused on productivity and the right KPIs. But as an employer in the mining industry dealing with a competitive landscape, we want to make sure that we are competitive on a number of different fronts, including wages, to attract those employees, and then once we have them, to make sure we've retained them. And South Carolina is a nice place to live, or the Carolinas in general is a nice part of the U.S. to live. We've got our workers live in both states, North Carolina and South Carolina, and when you compare that to the deserts of Nevada, I think it's a good place to be. So it's one of our focuses. It's one of the focuses at Haile, is to ensure that talent management is always at the forefront of what we do.
And as far as I know, some beautiful golf courses.
Yeah, no, absolutely. It is golf mecca. Yeah,
exactly. Yeah, super. Question, because we are already talking about Haile and the underground. Can you tell us already something about CapEx you are planning with, let's say, or estimates you have to build the underground? Is it paid through the open pit production already? What might be a foreseeable mine life for the underground, and can you maybe extend the open pit a little bit more as you are working on technical stuff and other, I would say, initiatives already?
Yeah, so the underground is the future of Haile. So with this technical review, we're basically looking to reset expectations and reset the operation of the open pits. Basically, again, focused on high margin ounces and not mine the value destroying ounces. But not to say that the ounces that are currently in reserves are value destroying. But we will look at optimizing the open pit operations and really setting it up to generate long-term free cash flow from the operation. And then beyond that is the underground. So we are very excited about the potential of the underground. Right now, we've got the Horseshoe deposit that's That would be the first deposit that we'd be mining. There's a good resource there, along with Palomino, which is early days, but also has an inferred resource. We've mentioned in prior disclosures that there's a number of new discoveries in the underground. One is called Pisces, the other is Aquarius, and basically from Horseshoe along to Palomino is a 1 kilometer corridor. So why we want to go underground, not just to extract the high grade from Horseshoe, is to do some extensive drilling at underground and look for more targets, but also prove up the targets that we do have. So I think the future of Haile is underground. I think the reserves growth that you'll see from us going forward over the long period or long term will come through underground discoveries. And that's another reason why we just want to get the permit and go underground. I believe the underground will be funded in terms of capex from cash flows from open pit operations. But basically, Haile will become an open pit and underground operation once we start producing from Horseshoe.
Okay. Let's assume for just a second that the SEIS will be further delayed. Let's say you have maybe in the future a little bit more of a bad outcome, I would call it. What might be a plan B?
Yeah, I mean, we are well set up to receive the SEIS final decision and associated permits. We've got good engagement with all stakeholders, including the regulator. This is really the final stretch here for the regulator to complete their review process. We are addressing any outstanding questions they do have, but all the major issues have been squared away. So basically, this is the home stretch. There could be some further delays. We're not sure yet, but we're pushing the regulator the importance of why we need this permit, because it also translates into jobs. So if we do have to slow down, it also means we'd have to potentially reduce the amount of workers that we have. So that's just the risk that we'll continue to manage. Operationally, again, the two biggest issues that we have that we're managing effectively right now is just around waste management and water management. We mentioned last week that we've got some evaporators, and we've ordered more evaporators, which will reduce water levels by 30%, which is quite significant. But we are moving water around from storage pond to storage pond, from pit to pit. And then you do have to open up more pits, which introduces more water. So you do have to manage water levels. And if there's a further delay, then we'll have to slow down mining efforts. The amount of waste as well, we do need the expanded footprint to allow for waste storage. And the more you mine, or the faster you mine, the more waste you produce. But one of the things that we're implementing is grade control, not just on the ore that we're mining, but also on the waste we're generating, because there's certain potential acid generating waste that needs to be stored in specially lined facilities. The less PAG material we produce, the less PAG storage we'll need. So that's actually one of the opportunities we have at Haile to reduce the amount of waste through RC drilling. So it's basically a risk management process right now. But if there's further delays to your question, we will have to just slow down mining. But again, we're going to always be focused on generating as much free cash flow as we can, and working with all stakeholders, including the regulator, to demonstrate what we're doing and how stringent practices we have from environmental and social standards.
Okay, before we talk about the DPO, general questions. We're always talking now about free cash flow, making money, high margins. That's on the one hand. On the other hand, I think you have a project within the next 3 to 4 years that you want to come well over 500, maybe 600,000 ounces per annum. We see with all your projects, this is absolutely makeable. But could it make for you sense? And now here comes two questions in one. On the one hand, like we saw with Calibre and Fiore, that a mid-sized company takes over a 45, 50,000 ounce producer just because they are neighbors, they know each other, and things are working well. Is this something which might be an option for you? And on the other hand, when we shareholders will see some dividends?
Yeah, no, great questions. And as I mentioned, I mean, capital allocation is one of the priorities that we do have. We want to make sure that we are enhancing the capital allocation program at Oceana Gold. And for us, we want to ensure that we run a balanced business, one that's reinvesting in high margin growth. The other is to reduce our debt obligations or debt levels. and then, as importantly, to deliver returns to shareholders. We used to pay a dividend. I know the board would like to get back to that situation. I think we're set up well to achieve that in the future, the near future. But basically, we're not going to invest in ounces that are low margin. We want to make sure that what we're investing in, and I think the shareholders demand this of us or any company, is on the ounces that are high margin, especially those ounces that can withstand a drop in the gold price. I know all of us believe the gold price is going to become $2,000, $3,000 an ounce, but there's no guarantee that that is going to happen. So we want to make sure that what we are investing in passes a litmus test from a lower gold price standpoint. And obviously, paying dividends is a focus for us as well going forward. Now, in terms of transactions, I mean, we're focused internally. We have to deliver on our internal priorities, those 5 priorities that I've mentioned several times during this presentation, before we can consider transactions. I mean, we'll always look for opportunities. You always have to be at the dance to see what opportunities there are. But we're not focused on transacting today. We're not at the stage to be able to transact. But once we start delivering a new mine plan at Haile, once we restart Didipio and get it to steady state, we might be in a position where we can look for opportunities to transact. I can tell you from a person who's in charge of M&A at Oceana Gold, I believe in consolidation. I believe the industry has too many companies. I believe that companies should get together with for the right reasons, whether it's synergy involved, to become better companies, to become high quality businesses. So that is something that will be a focus for Oceana once we get through this stage of focusing on the internal opportunities that we do have. And I wouldn't focus so much on how many ounces we produce. It's, again, more around the returns and the free cash flow generation.
Exactly. Making money is key. This is something a lot of tech companies still have not understood yet. The more loss they make, the higher is the share price. We will see when this comes to an end. So there's a question from, I guess, a German or a Swiss investor. Hi, relating to COP26. How much are your results affected by rising costs for fuel and energy? Which measures you take to reduce the carbon footprint? Do institutional investors already attach greater importance to the issue of sustainability? Meaning, are you from, let's say, institutional investors also ESG forced already?
Yeah, I mean, ESG's become bigger and bigger over the last several years. We've been doing ESG for 30 years. So, I mean, we have to do it because we're a mining company and we're a responsible mining company. And as a responsible mining company, you have to do the things around the ESG effectively to enable your business. If you don't do it properly, you're not in business. That's the bottom line. So we are proud of our ESG program. We're proud of our ESG performance, but we're certainly nowhere near perfect. So there's always opportunities to do better across those 3 broader areas. For us, fuel management or energy management is a key in terms of reducing your greenhouse gas emissions. But also reducing your costs, because there's a price associated with energy. And 30% of our costs at Haile relate to fuel, and 30% of our costs at Macraes relate to fuel. So it is a big part of our cost base. And with the rising fuel prices, we've seen an increase to our operating costs as a result. So looking at opportunities to reduce your energy consumption, not only is it good from a business perspective, but it also allows you to meet your greenhouse gas reduction target obligations. So we are looking at how, getting a better understanding of our energy costs or inputs to see how we can further reduce and optimize. Looking at our fleet, for example, WKP, which would be the new project, we're looking at potentially going with an all-electric fleet. So again, looking at the costs associated with that and ensuring that it also meets our obligations in terms of what we stated from an ESG perspective.
Can you power that with solar also?
Well, I don't think you'd want to do that in New Zealand. I wouldn't have the right kinetics it wouldn't be conducive really for solar energy. But when you look at our operations and where we draw energy or electricity from, a lot of it's actually from renewable sources already. So at Haile, I'd say 75% of it is from renewable sources. In New Zealand, it's 100% hydro. So already 100% renewable energy. And then Philippines, they're still dependent on coal power generation, but I'd say half of it is coal, half of it is from renewable sources. So for us, we can reduce our footprint by looking for those additional renewable energy opportunities, but also looking at changing out our fleet and going with electric where it makes sense.
Okay. Yeah, then let's talk about the Didipio. First of all, again, congratulations that you guys managed it after 2 years of absence in mining, I would call it. I know there was a lot of hassle in the past, for sure. I don't know if you are allowed to, but can you describe a bit the situation now? What is the situation with the communities, with the people who are now again working for you, which I could imagine they are really happy to do so, because as far as I know, Philippines were also very hard hit by COVID. And I could imagine unemployment is still quite high. And on the other hand, the government needs also taxes for sure. Yeah. So I think it is a win-win situation for communities, employees, tax paying, restarting let's say the next 20-25 years with your Philippine operation.
Yeah, I mean, it's fantastic to have Didipio back. It absolutely is. It's a world-class operation led by a world-class workforce. Not to take away from any of our workers in New Zealand or the US, but the Filipino workforce we have at Didipio, which is the vast majority of the workers we have at Didipio, are some of the best mining professionals that I've ever seen on the planet. They are hardworking. They're highly educated, and they are steadfast focused on the key things around health and safety, around productivity. It truly is a fantastic operation led by fantastic workers, and it's so happy to see them gainfully employed again. So we are continuing to ramp up the recruitment efforts, and we expect 90% of the workers to be in place by the end of this year. As you said, COVID is still a major risk in the country, and that's a risk that we've been managing on site as well, and promoting and supporting the facility or logistics around facilitation of vaccinations. So 75% of our workers have had at least one shot. I think 55% of our workers are now fully vaccinated in the Philippines. But Didipio is a major source of socioeconomic benefits locally and also nationally. So it will be a major contributor to the post-COVID economic recovery for the country. We've always had very strong support, recent support from the local communities. It's demonstrated by a big rally 2 years ago where they basically went down in convoys. I think there was 1,500 people there from the local communities to rally in support of the operation and the company. So we have very strong support from the local communities, multiple communities around the operation and our workforce and their families. Again, we're a major source of socioeconomic benefits and jobs. We employ 1,500 directly, and there's estimated 4,000 to 5,000 indirect jobs from this operation. And we do things properly. We're a responsible mining company, and we do things properly. Any of the noise related to dissent in the communities is not from the communities. It's from NGOs. It's from a minority group of NGOs that ideologically oppose mining. That's just their view. We respect everybody's view, but we are a responsible gold mining company, and I would say that Didipio is probably one of the most responsible environmentally and socially mining operations on the planet, not just in the Philippines.
Absolutely. And if they oppose mining, they should first give back their smartphones, because there is no smartphone without mining. Very simple. So there is a big question from a shareholder out of Liechtenstein. How vulnerable are you to an unfriendly takeover? And wouldn't this be the best way to generate shareholder value given a series of unexpected events, disappointments, including poor performance at Haile, $150 million capital raise, CEO departure, etc. at Oceana? Taking the Calibre Fiore deal, a 40% premium for Oceana would definitely be an attractive offer for Oceana shareholders. Okay.
Sure. I mean, it's a loaded question, but it's a good question. We are we've had changes this year. We've got 2 new board members three new board members. Two of whom include Mick McMullen and Paul Benson. Paul's now the chairman of Oceana Gold. If you look at their track record, they've created a lot of value for shareholders in their careers. They continue to create a lot of value for shareholders in the ventures that they're a part of. Even more recently, Paul was the CEO of SSR Mining, which merged with Alacer. Mick McMullen was the CEO of Detour that ended up selling to Kirkland Lake, etc. Mm-hmm. So these are two mining stalwarts that are part of Oceana, and through their efforts or through their involvement with Oceana, they've brought in Scott Sullivan, who's their COO and interim CEO, and David Landano, who's the new GM at Haile. So I feel very confident in where we are today and where we're going in the future. There's a lot of work we need to do, and we're focused on delivering on that work, and it's going to take some time. But it wouldn't make sense for us to transact today because there's a lot of value still not realized in the share price. If you look back at where we were trading before to where we're trading now, even a year ago, we got up to $4 a share, and that was without Didipio. We've got Didipio back in the portfolio now. This is a major source of free cash flow generation going forward for the company, and I don't believe that value is reflected in the share price currently. So we need to see that value back in the share price. We need to continue to advance the Martha Underground at Wahi. We need to continue to advance WKP, which again we've called it a game changer, and we don't necessarily think we should be transacting at this stage, given there's still so much work we need to do there at WKP. Mm-hmm. And then finally at Haile, we're going through the technical study work. We're going through the development of a new mine plan. It's had a good year this year. We recognize that historically it hasn't delivered to expectations, whether it's internal or external, but we want to change that. So we have a lot of work still left to do at Haile. So today isn't the right time for us to look for opportunities to transact. But again, my view is consolidation is important at the right time for the right reasons. And I know there's board members and management who believe the same. We're shareholder friendly. We're going to act on behalf of our shareholders, not one or two shareholders, but all shareholders. We're going to make the right decisions for the business. And by making the right decisions for the business, we're making the right decisions for all shareholders.
Definitely. Would you be a little bit protected if an unsolicited takeover offer would come?
Well, I mean, any offer needs the support of shareholders. And I can tell you, our shareholders, and we've got one of the best shareholder registers on the planet. They are not looking for us to transact. They're looking for us to focus on the priorities that I've outlined, make sure that we deliver on those things, advance those projects and those opportunities forward, get the Didipio up and running, getting it to steady state. And then maybe at that point, once we've seen that value back in the share price, could we consider looking at transacting? Again, any offer that's made to Oceana requires the support of shareholders. And I know the view of our largest shareholders and shareholders more broadly that this isn't the time for us to transact.
Yeah. To me, also definitely too early. I want to see much higher share prices.
That's right, and I'm a shareholder too, and I don't believe that
exactly.
Right
we are on the same boat. That's for sure. Coming back shortly to Didipio. Let's assume everything goes the way you want it. By the fourth quarter next year, you have it fully up and running, 120,000 ounces of gold, approximately 12,000, 13,000 tons of copper. Where do you see the AISC on the one hand, and on the other hand, how do you think together with WKP, of course, this would affect the group consolidated AISC for gold production? Let's put it all in gold together. Can you bring it below 1,000?
Yes. Yeah. I mean, Didipio, based on metal prices on a byproduct basis, we'd be looking at an AISC of sub $500 an ounce, possibly even lower. So it is, again, a major source of free cash flow generation for shareholders. WKP, again, as I mentioned, that's also going to be a first quartile producer once we get it into production. So yeah, no, absolutely. I mean, we're focused on driving our costs lower. We're looking at being more prudent in terms of capital allocation to drive free cash flow generation higher. So that's what our mandate is. That's where our focus is, and there's no reason why we can't deliver on that.
Super. So that would really raise your margin then in approximately the next 9 to 12 months is massively. And we expect also much higher gold prices because from next year onwards, the banks have to really show me the physical metal from the BIZ, and it's no longer so easy to really go with those nasty games on the COMEX. So it's getting really interesting. Fantastic. So the hour is, just now done. Let me shortly have a look here that I did not miss somebody. No, that looks all good. Okay, perfect. Also from my side. Yes, sir. All fine. Maybe one last question. Where do you see the mine life of Didipio by now?
So Didipio right now, based on reserves, has an 11-year mine life, but there's before we were shut down, we were drilling for extensions of the ore body, so it's still open. We haven't found the bottom yet, so I think there's going to be more mine life at Didipio. More regionally, whether it's very close within a kilometer of the ore body, there's other opportunities, which again we have to get back to the exploration side. And then more broadly in the Philippines, there's definitely a lot more opportunity for both gold and copper discoveries. So it's one of the most geologically endowed countries in the world from a gold and copper perspective, and undermined, I'd say, globally. So it's certainly a good place to be. But for us at Didipio, that's where our focus is restarting operations and then looking for extensions to the ore body that we're mining.
Okay, super. So also very prospective and long mine life. This is what we want to see as shareholders. Fantastic, Sam. Thank you very much for your time to answer also all questions very honestly and very broadly. This is also always high respected. And wish you all the best. Please stay healthy. That's the most important thing. And hope to see you soon. Thank you very much.
Thanks, Jochen. Thanks.
Thank you. Yeah, ladies and gentlemen, that was Sam Pazuki, the Senior Vice President, Strategy, M&A, and Investor Relations of Oceana Gold. Yeah, you heard it. The company is really on track. Challenges are solved, and also a lot of future development potential is here. And we are not talking about 3, 4, or 5 years. No, we talk about the next 12 to 24 months with really great initiatives. Haile underground, Didipio back to full production, WKP really ramping up, moving really forward with this high-grade asset. The company has enough money. Also, I would say the balance sheet looks very healthy with that situation they have so far. This is absolutely manageable. And looking at margins, this is for me the most important thing, because as I mentioned already during the presentation, for me it's not sexy to make losses or just to grow. For me it's important that you really have positive numbers under the final balance sheets and under the earnings. This is the thing what you really need to have, because finally a company has to make money, because from there come share buybacks, dividends, and future investments. And I think Oceana is doing everything right here. To me, the share price is massively undervalued, to be honest, and I wouldn't be astonished if that company would have a great year next year. So time to jump into it, time to really have a look on Oceana Gold. Thanks for watching us, and bye-bye from Switzerland.